Bitcoin's reclaimed the key $60,000 level, but the question is, will it sustain? Because we have an all-important high-impact economic data event happening today. It is the CPI inflation data coming in. Of course, we had the PPI yesterday, and that slightly shifted the probabilities for how much they may cut at the next federal meeting that's going to be taking place in September. So we have a whole lot to discuss in today's show. Make sure you smash the like button, hit the bell notification, and subscribe to the channel. And I am going to start off with the banter bubbles over here. You can see majority of them are up on the daily. Let's quickly have a look at the hourly. Also trying to push up over there. So Bitcoin obviously reclaiming that 60K level has signified a little bit of a risk on signal back for the market. But I'm going to show you in today's show at what point do I go all in back into the markets once again with 100% of my capital deployed into the crypto market. Stay tuned until the end. Again, guys, smash the like button and let's get the show on the road. And if we have a look over here, today, later on, depends on where you are in the world, it's going to be 4:30 my time, which should be around about where the US stock markets open later on today. That's going to be when we get that CPI read coming in. Anything under 3% will obviously be really good for the markets. Anything higher than that, and you can expect that they're going to do a 50 basis point rate cut. Anything on par, and I would say it's going to be a 25 basis point rate cut. You can see over here, looking at the S&P 500 overlaid with inflation over the last couple of decades. Well, we've had a pretty big drop, right? Inflation has been coming down over the course of the last couple of years since June 2022, where it peaked all the way up here at 9%, and pretty much it's been coming down. Currently sitting slightly below 3% at 2.98%, but we'll get the next read today. And once we start to approach that target rate that they have of 2%, you can expect that the monetary policy should shift into very, very positive for crypto, meaning much looser monetary policy and a risk-on environment for crypto. Currently looking at a 45.5% chance that you'll get a 25 basis point rate cut and a 54.5% chance that you will get a 50 basis point rate cut. The markets are still relatively fearful. If you look over here, the fear and greed on the stock market is still literally sitting in that extreme fearful zone. And in a bull market, you want to be buying that extreme fear. To correlate this to the fear and greed reading in crypto, anything between 20 and 30 or under 30, I would say, on the Bitcoin fear and greed index in a bull market is a very, very strong dip buying opportunity to load up for the longer term, right? We haven't reached peak euphoria yet. We still have probably about 12 months to go. Go watch any of the previous shows if you want more information on those various different timing cycles. That is something important to look at. And if we continue on over here, even Rand, you can see over here, digging deeper into the Japanese yen crash and carry trade, or cash and carry trade, excuse me. And he says the more he goes into it, the crazier it gets. Why? Well, they printed money and gave it away interest-free so people could invest in the global economy. They propped up every single world market with the money that they're printing out of thin air. Every other country turned a blind eye to it because their markets were and debt were actually being brought up. So they're not going to complain about that, right? And they bought up over 80% of the entire ETF market locally, as well as about 10% of the global stock market, right? A large portion of world markets have literally been pushed up by one country printing money uncontrollably and lending it for free. Well, the US is no better. And we know that inevitably they're probably going to continue to kick this can down the road. And a lot of people believe that this whole trade is still going to unwind, right? The yen cash and carry trade is still unwinding, and they think that it's going to get a whole lot worse. But when I have a look at the charts, I see something a little bit different. We'll get into that today. This is also one of the most important charts that you can look at right now. It is the Sahm rule recession indicator, which has now just crossed above that 40 mark over there, signifying that recession is imminent, right? But it's all about timing. And timing, you can still see prices rally pretty aggressively into the end. And this is the chart that I'm most focused on, which is going to be the global liquidity, which is now breaking also above the 4 mark into what's labeled as the fun zone, right? Because this is the only way that they can temporarily try and stop things from breaking and essentially kick the can down the road. And that leads to Bitcoin, one of the hardest assets the world has ever seen, to move towards the upside, right? True hard money. That's why you have gold breaking out to all-time highs as well. And on top of that, another super important chart that's kind of playing out right now, we've been looking at this for months, is the DXY, right? Look at that, getting the rejection from these levels that we've been looking at for the last couple of weeks over here, saying that we want to flip this previous support now into resistance. We came in to test that on the DXY. If the dollar index, which is the DXY, moves towards the downside, usually that's where you see the Fed shift into loose monetary policy and cut interest rates, and pretty much Bitcoin dominance tends to top out somewhere around there, and that's where you get those full-blown altcoin seasons, and we'll start to see some healthy flows of money coming back into the crypto market. We're not there yet, but we're teetering on it. We're right on the edge, and it could happen within the next month or two, so it's something to look at, and we're looking for a big markdown phase over here. The most important thing about this chart is when you actually zoom out and you look at it with a more of a zoomed out perspective, what you've noticed over here is we had the symmetrical triangle started to break that down, but we want acceptance below this level over here, which is the gray box, as well as the midline of the multi-decade parallel channel that been governing price towards the upside. And as soon as we lose that, that's where we look for the big bull market. So timing wise, you can see it's lining up at some point into the next year, right? We can be looking at that. And if you look at the yen cash and carry trade over here as well, affecting the Nikkei, which is going to be the Japanese stock market, it has bounced off of critical support over here, which is really a good sign. If we go over here onto the weekly time frame, there's your picture, V-shaped recovery starting to put in a major reversal. The only problem is you have a big inefficiency over here in the form of this wick, which might mean that price will eventually come back to revisit some of these levels. So do keep an eye out on that. And we can also have a look at the rest of the traditional markets over here, which also seem to be putting in a major bottom. And this is part of the reason why I'm not too worried about this whole trade unwinding yet. I think that they'll kick the can down the road, and it will happen much later, because NVIDIA, which is largely responsible for much of the S&P 500 in terms of weighting, continues to put in high highs and high lows, bouncing off of the 90.75 level, a clear area of horizontal support. You still have in the shorter term a downtrend with lower lows and lower highs, but as soon as it starts to break above this, which could be as soon as today or tomorrow, pending what happens with the CPI inflation data, you're looking at continuation up to 136, and once you break out above that, it's all-time highs. We can also look at Apple, which in terms of weighting also has a massive weight in the S&P 500, and also bouncing off of critical support and getting sent towards the upside over there. Coinbase, if you have a look at this as well, coming off of a key level of diagonal support, there it is, holding into that box over there, and you're looking to reclaim back above 208 to confirm the deviation back into the trend, and then you'll start to see crypto rally as well. So crypto slightly lagging what you're seeing in the stock markets, and here's your stock market picture. Remember, we went long on this wick over here, looking for the move back into the 200 weekly moving average. You saw the same thing on NASDAQ, and we spoke about forward looking when you get a certain drawdown in the NASDAQ and the S&P 500, what the results look like 6 and 12 months from now, and they're mostly up. We spoke about 44 weeks from this candle low over here is where your expectation can be to put in a major bull market top, right? So end the bull run for the S&P 500, and then look for a major pullback and possibly even bear market territory, and that's where you start to see these things like the Sahm rule recession indicator really kicking in, the inverted yield curve as well, also affecting the markets and leading into that broader recession. So until then, we're still long and strong. I put my money where my mouth is. Here it is. You guys know that we took this trade a couple of days ago. There's my entry point over here, currently up over 60% on this current trade on Prime XBT, with the histogram now ticking towards the upside and getting that bullish cross. So we are looking for continuation on this move, literally into new all-time highs. And one of the target areas that we have is going to be up to about 6,200. And just reminding you again, if you measure out from that point, 44 weeks later puts you in June 2025. So that should give you an outlook of a bull market for both crypto and stock markets for, at the very least, at least another 6 months, right? Possibly even 12 months. But if you want to play it super conservative, you can start to de-risking some of your positions 6 to 8 months from now, 12 months at a push, and possibly even, if it gets to be a really extended extended right translated cycle, well, then you're looking at about 18 months, and I really wouldn't push the envelope anything past that. That's probably where I'm going to be fully exited before the end of 2025. So that's the trade that we've taken over there. DXY, we also had a look at breaking down over here. A reminder, any of you that do want to take these trades, you can look on the left-hand side. You've got a massive list of Forex pairs over here. You also have all the various different CFDs. So if you want to trade, for example, gold, the top German 30 coins, top German 30 stocks over there, Euro 50, Dow Jones, crude, copper, Brent, crude oil, S&P 500, UK top 100, crypto pairs as well. Literally, they have absolutely everything over here on Prime XBT. It can be your one-stop shop. So use the link in the description below if you specifically want that sign-up bonus, right? This will qualify you to a special sign-up bonus. Only my show gets this. No one else in the whole world has this. You can use the link in the description below if you want that. All right, Bitcoin and key levels to reclaim. Well, you can see we are at major resistance. So first and foremost, it is a good thing that we've reclaimed back above $60,000. But there's definitely still a whole lot of work that needs to be done over here. Most notably, flipping full on bullish will start to occur if we can start to break above $63,000 and close multiple high time frame candles there. That will clear out the resistance, and this would look like a major bear trap, right? These lower regions over here. So still at resistance on the weekly time frame, but we do have the potential for the inverse head and shoulders to play out. You can see so far it's following almost to perfection, right? This has been the plan all along. We've been watching price over here. It's just a question of what trajectory does this right shoulder follow. We don't want it to go up too aggressively, because if it does, it decreases the probability of a breakout. It would be better to see us grind into this region over here. And if you follow this kind of a trajectory, you know, you're looking at anywhere between the end of August and possibly somewhere, I would say, in the middle of September, where you would start to approach the neckline over here. And the neckline, as you approach that, you would expect that the next move into that will lead to a breakout. Currently, and it depends again on when this happens, the trajectory will change, giving you a measured move somewhere into that $79,000 to $80,000 region. As this is especially coming off a very low volatility, you can see over here, this is one of the lowest reads that we've had, represented by those blue vertical lines running down the screen. We've never had so many blue vertical lines, and consequently that tells you that the next move that happens when you leave the trading range is going to be an enormous one. So best that we hope that it goes towards the upside and not the downside, because if it expands down, that could end the bear market. Another signal over here that we're looking at is to reclaim all of these moving averages, which is why if you start to get above that $63,000 region, you'll almost inevitably reclaim all of these high time frame moving averages, the 3, the 9, and the 30. These are the ones that we're looking at, showing you the inverse head and shoulders over here. And essentially, this is just your chop environment. And this is totally normal following big moves, right? You can see over here, anytime you get the big move up, you tend to chop with those moving averages converging into one another, consolidating, and then you lead into the big next move up. And the bigger the move up, the longer the next consolidation, and the longer the next consolidation, the bigger the following move. So over here, this has been a long-term consolidation that we've been in, and that's brought the fear and greed down, right? Interestingly, despite the move up that we've had yesterday, the fear and greed actually dropped from 34 yesterday down to 30 today. So again, this just presents another opportunity to get into the market following what will inevitably be nearing the end of this long-term corrective phase of consolidation, having price come down 33% in our fifth correction within this particular bull market cycle, with our biggest drawdown on the weekly having been 18.46%. And in this cycle, we haven't seen anything like that, right? Here's our previous drawdowns. The next closest to that was 16.15%, which we said presented a major buying opportunity. If you have an outlier at 18% down, you're looking to buy the dip on that, which is exactly what we did. And then the question was, are we V-shaped recovering, or are we going to just range? Theoretically, this is closer to a V-shaped recovery right now, although it may not feel like it. But when you look back in hindsight, if prices do continue to grind up over here and you see something like this, you know, you start to, let's just grab that again, you start to reclaim this level over here, and next week you start to push up, then, you know, this will actually start to look like a V-shaped recovery. So it doesn't feel like it right now, but Currently, that's the state of the market. As soon as you again break above, what's the key level? $63,000 over here. Then you'll confirm your next higher low and you'll be looking for expansion. And then you can say the V-shaped recovery is in fact intact. Now, importantly with this, we've been 5 months into this correction. It's officially been, if you have a look over here, 153 days from ultimate top down to current levels where we're at, 153 days. Our longest term expectation would be that this would last for another 31 days, right? So 6 months on the furthest end, which would again line up around the 14th of September. So I want to go back here just to remind you, 14th of September, if we look at our trajectory over here and we put that around the 14th of September, let's just grab the yellow line and we say that the 14th of September, that will take you somewhere around there, right? Now you can see that lines up beautifully with the trajectory of that inverse head and shoulders. So keep an eye out on that as it does potentially unfold. Descending broadening wedge still intact. Nothing's been invalidated. Typically what happens on these descending broadening wedges is when you come into that final dip over here, which is what we would have seen at this region over here, it does create quite a mega shakeout. And then you get quite an aggressive move towards the upside, which again lines up with somewhere around mid-September. You could start to break that neckline on the inverse head and shoulders as well as the descending broadening wedge, depending on which time frame you're looking at, right? That's the descending broadening wedges on the daily, the inverse head and shoulders on the 5-day or the weekly time frame. So looking at this over here, again, reclaiming above, what's the key level? $63,000 will also get us above the 200-day moving average, which is going to be looking good for continuation at that point. So still watching that level over there. We hit the fair value gap. It's been slow. I told you it's not a high probability fair value gap, but it should elicit a little bit of a reaction, which is exactly what we've got. We hit the inefficiency. Currently, it's pushed price up from the low to current levels, 5% to the wick high over there, about 6%. Again, reclaiming $63,000 levels gets you above this region, and that starts to open up the full bull trade where you're looking for continuation long. A strong rejection from this level, which to me right now is looking less likely, would then possibly bring price down to $62,000. So far, it looks more probable that we're going to start to push through this level and possibly reclaim that $63,000 level, and that's where you should see things run. The reason that I say that is also this, right? We've seen on the 4-hour time frame continuous higher lows forming over here, but we have had lower to equal highs, right? We said that the high probability short zone, if you were wanting to hedge from this move when there was still a lot of fear in the market, would have been taking your fib from the low to the high over there, and that lined up exactly with the 0.618 and 65 level. That's your golden pocket. You can see that wick going absolutely sweet and perfect into that zone over there, and that was the short trade with stops slightly above. And now you can actually see this if you look at the liquidation heat map. There are the stops over there, and this is the form of shorts that were hedging. That's coming in at $26 million worth of liquidity in that region. So watch for the next spike. If we do spike into that region to capture those stop losses, that could potentially reclaim price above the 200 exponential moving average on the 4-hour, and that's where your trends on the low time frame really begin to shift on your 4-hour, right? If you do get the spike up, close multiple candles above, you'll start to see these turn back towards the upside, and that's where the fear and greed will start to increase back into neutral, possibly even into the greedy zone as the bulls attempt to reclaim the more significant overhead levels. And that lines up again somewhere around the 15th of September where you could possibly break those key levels. So all in all, the longer that bulls can hold price action sideways here, the more bullish it becomes for continuation higher, right? So you want to see a slow and steady grind over here, leaving people on the sidelines, following being shaken out, right? And then get them chasing price. As soon as you break above these key $63,000 levels, that creates those big expansive moves towards the upside. So we are watching that over there, and we'll continue to hold long and strong. If you do want to take trades on a non-KYC'd exchange, guys, I recommend checking out 𝗕𝗥𝗚𝗓. Remember, they do currently also offer an airdrop opportunity. Every time you trade on there, you qualify for an airdrop in the form of the 𝗕𝗤𝗕 token, and they have sign-up bonuses. It's all listed in the YouTube description below. They've got derivatives as well as spot trading pairs on 𝗕𝗥𝗚𝗓. Okay, total 3. So total 3, we spoke about it yesterday, hitting the 0.25 Mayer multiple level level on the total 3 chart, which would have been this week over here, and in 2020, as well as I believe in 2017, that's where we saw the major runs happen on the altcoin market, right? That was the bottom for the altcoin market. So a pretty interesting level over here. As the wick came down, we slightly front ran that major support zone over here that I outlined between $408 and $450 billion. Right now, breaking above the high time frame mid-range, you do still have lower lows and lower highs, but if you can start to see price break this downsloping trend line and reclaim back into this zone over here, it will be looking good. Remember, we always split our ranges up into discount and premium zones. This still is the discount zone at the bottom of the range. This is your premium zone. Now, premium zones aren't always for selling. It depends on how you approach that level. If you approach that level like this with a V-shaped recovery, then it's for selling. But if you can slowly grind out of the discount zone into the premium zone and you can spend a lot of time there, that leads to the big breakouts, right? So we'll see. It depends on how we approach the premium zone, which is essentially the yellow box on total 3. Bitcoin dominance is very, very, very close to a top. So you can see over here, pushing up into that trend line over here, you do have a rising wedge over here, which is typically a bearish formation. Now, the first target over here on the breakdown of a rising wedge over here would be down into the 200 weekly moving average at 49%. And if it does the full retrace, well, then you're looking for a move all the way down to 39%, which is trading it back to the bottom of the range. So as you approach the top side of the trading range over here, marked by the yellow box, coming into that 60% region, this is where you probably want to start to look to gain additional exposure, specifically in the strong altcoins, right? Not in the weak altcoins, but in the strong altcoins. Keep an eye out on that as this grinds up. This may be one of the last and final opportunities to get some really, really low entries. So also, you have, of course, Ethereum coming all the way back down, retesting the bottom side of the range. And this was the breakout level from the ascending triangle. Look, it will take a little bit of time, as you can see from the ETH BTC chart, but just keep an eye out on it. As BTC dominance pushes into 60%, don't be surprised if you see the final bottom, the final actual bottom on the ETH BTC chart, which is the left-hand chart over here. Give or take, fair enough. This is been pretty shot, right? If you've been an ETH maxi, it would have been a very, very painful situation because you've literally been down for 140 weeks, right? Which is close to 3 years, I believe. It's about 3 years of just continuous non-stop pain. Now, these markets typically work like this, right? What typically happens is you see the altcoins get smashed by Bitcoin for not 1 year, not 2 years, but 3 years. And then they have a period of 1 year where it's just up only. So our aim is to obviously allocate aggressively into the transition point or the tipping point between the end of the 3 years of pain and into the start of the first year of up only for the altcoins, right? We want to time that, but we want to wait for confirmation because we're playing with serious money over here, right? We don't want to lose any capital. So capital preservation is still the name of the game until such time as monetary policy starts to shift into easy up only mode. And we're seeing the signs, right? We've seen the signs with the DXY coming down. We can see the signs with the flush in the stock market, and you expect the final phase, as the stock market suggests, about 44 weeks left before probably setting in a major top, possibly even the final bull market top before leaning into a bear market. And all of that lines up with, the Pareto effect, the 80-20 principle. You tend to see the biggest moves in the final 20% of the bull market is where you'll make 80% of all of the gains. So stick through until the end. Don't give up, right? Don't give up. Actually, that's probably a good place to remind you, if you're not battle trained for these markets, or even if you think you are, I really recommend come through to the link in the description below, click over here, join into Whale School, right? We're currently taking signups. It is almost full, so let's just let that load up over there. I think you have about a week left to join. Let's just see what it says. Yes, 7 days. You have 7 days and 5 hours left to join. Use that exact link. Come through, type your email address in, click sign up, and then follow the prompts so that you can get in. If you sign up today, you can actually start with the course content already, but the first live workshop will take place next week on Wednesday. And I definitely have to let you know, I have big plans for those live workshops to bring you additional alpha to really dive deep into those lessons. So you're always going to learn more. All right. Solana ETH over here, starting to break down some key levels. There's still a possibility that it's bullish and puts in a higher low. You just need to watch, but it's starting to break those key zones where you measure between here, and you look at the 50% level. You want that 50% level to hold, so you need to either see it snap back and reclaim. Otherwise, you might revisit all the way back down to 0.04909. That is on the Solana ETH ratio, right? The Solana ETH ratio. Break below this line and almost inevitably you're going to revisit all the way back to the upsloping trend line. It's still bullish in the longer term then, that you'll be looking for a major macro high low, and possibly then you only break out on this later on, maybe even towards the end of the year, right? Again, just looking at very simple trajectories, and this is guesswork, guys. By the way, this is guesswork, but if you did break down, start to pick up over here and then reapproach back to the range high, well, that lines up somewhere around October, November, where you would expect this to start to break out. And then you're looking for the real breakout on Solana against ETH, meaning Solana will outperform Ethereum, right? So we need to be really selective on the coins that we're picking. So far, I think in Whale Room specifically, we've done an absolutely phenomenal job sticking with some of the top coins, right? Like here, GigaChat, right? This has been one of our picks, up absolutely massively. I actually went through a whole list of our previous calls this morning, and I was quite proud of some of the results that we've seen. So if you look at the meme coin sector, still the delta is negative, right? Also dropped in Whale Room over here. You can see for the most part, we have over here people shorting, more shorts than longs, and that is on Pepe, on WIF, and on Bonk over there. Solana also negative over here on the delta. Only Bitcoin and ETH on the top left over here are presenting positive deltas. So here's an example. Some of our previous calls over here in, of course, Whale Room. So I gave this list this morning. These are some of the ones. All of the ones that are pumping have a rocket. So Giga, Popcat, Banana, Harry Potter, Obama, Sonic 10, Inu, ETH, Boom, Book of Memes, right? DCS, one of our losses. Rec, likely never to return. We'll see. Only time will tell. We got in a super low market cap, very low risk over there. Resistance Cat, absolutely pumping. That one's looking really good. Let's go back to, let's see, Resistance Cat over here. All of this, of course, has been dropped in Whale Room. So let's go to Resistance Cat. Okay, up another 23% today to 4.1 million. And I think this one's just going to keep climbing. So really, really good. Looking at the next resistance area, we'll see if it can break through that, coming in at 47 cents. And then after that, let's see if we can get up to 73 cents. That's the next zone. But so far, since the call's been given, up almost 200% on that one alone. We got Resistance Dog also pumping. Retardio, we waiting. It is up, but we waiting. That's why I put a little timing clock over there. When also absolutely pumping. We got Brett, Pepe, which is the Chinese Pepe coin, and Ponky, which is the monkey on Solana. Those three are currently down, but we're waiting, right? So that's a good opportunity for those of you not in Whale Room. If you want a little bit of an earlier entry, I think those ones are pretty solid bets, right? For the long term, these are all coins that I'm holding for probably the rest of the cycle, right? I've established my positions at what I believe to be the absolute perfect time, and I'm going to hold that for the next couple of months, anywhere between 6 and 12 months. So we can have a look at some of the coins that you guys want to have a look at. I can see over there, there is a question on 𝗕𝗬𝗕𝗥. So let's have a look at 𝗕𝗬𝗕𝗥. Yes, 𝗕𝗬𝗕𝗥 is also part of my portfolio, 100%. This one we gave it $800,000 market cap. So you can see, had you taken that trade also in Whale Room, we were probably the first people to ever talk about it. You would still be up massively, right? So you can look, if you switch over here on DEX tools to market cap, we'll quickly reevaluate how far up are we. So we got in at, here it is. Let's grab this tool over here and see where we're at, and then we'll do some price analysis. So we got in round about here. We up already, even despite the dump, 1,049%. Had you obviously taken your profits anywhere near an obvious place where you could have, well, you would have been up 10,495%. This is just off one call given in Whale Room, and all the way to the top side, 15,531%. That is again from the private Discord. So very, very, very good call over there in my personal opinion. And I think Resistance Cat could be one to maybe do something similar. So I'm looking forward to that. It's important to establish positions at low entries. Now, Rune, I see that's always a question over there. Is Rune? Let's have a look at Rune, USDT. Okay, let's go to Rune. There we have it. Let's see, what are we on the daily time frame? So far looking good, pushing up, respecting this level over here. We waited for months for price to sweep below $2.97. We got that exact sweep, reclaimed immediately, and now it's starting to look to push up. So continue to hold that position. Your market structure break, which is where things start to shift bullish, will of course only occur when you break above this level at 496, right? But I know you don't probably want to wait for that. So if you had taken this trade, if acceptance is gained back below 297, well, then of course it's invalidated on the long, right? Okay, what else? Yes, all in 24. You guys own Resistance Cat token. Well, at least Whale does. I don't know about the rest of you, but we've got into that around just under $2 million market cap. Okay, what else have we got? Nia, let's have a look at Nia. How is Nia doing? I know Nia constantly have token unlock, so it is one that you have to be careful of in that regard. It just makes it hard to run like the rest. Always important to look at the token unlocks, guys. But charting wise, it has come into a critical area of support over here at 346, right? So you're looking to at least trade it back to the next resistance level, which is coming up to $5. Break and hold above that, and you open up your new trading range, which will take you up to $9. All right. Okay, let's have a look. AI Tech. You guys want AI Tech? Let's go see how's AI Tech doing. Okay. AI Tech. Okay, coming into critical support over here. There it is. So this is the zone. Still been downtrending, right? When the Fed pivots, usually that's where you start to see the market's bottom, which we could be very close to. This is why today's CPI inflation data is so critical. Stay tuned, watch for that, see what the results are, and then we'll know what the Fed's next move is. But we did see in a report that it looks more than likely that they are going to cut interest rates for the first time. It's just a question of how much. So watch this over here. You need to see it break back above, get back above, back test into that zone, and now you have your stops below there and your entry somewhere within this region. But I wouldn't take the trade until you have full confirmation. Okay, what else? Jupiter, we can have a look at Jupiter. Okay, let's see. Jupiter, how's Jupiter doing? Okay, same thing as last time mentioned over there. I wouldn't change this. Possibility that you come down one more time into 68. Again, discount and premium zones. This is your discount zone as you approach that level. Okay, let's have a look at WIF. How's WIF doing? WIF was obviously one of the top memes. I don't know if it's still holding up or how it's doing. When we looked yesterday, we said it was a sloppy chart. Has there been any notable change? So you've reclaimed the bottom of the range. Wait for the back test into that 153. If it does start to show signs of strength on a low time frame, you can zoom in, watch as it approaches the zone. If it shows signs of strength by holding that as support, stop losses go below, and then you can trade it up to here, which is your next major resistance at $2.30. Break and hold above 230, and then maybe the whole trend is reversed over here, and WIF will start to look good. Okay. Link, I'm not sure how Link looks. Before we go to Link, let's quickly see Mantra. Okay, Mantra, getting close to the trend line over here. I think anywhere within this region is probably not a bad place to at least DCA a little bit into Mantra. It's been one of the top performing real world asset coins, and if it does hit this level over here, I'm looking for a reaction and a break back above the range highs, get back above $1.02 over there, and then you're looking for trend continuation. This would then become a major high low, and you're looking for price to move up. So going on to Chainlink. Okay, let's see Chainlink. Okay, it hit the level. You're looking for momentum in the market. There's not much momentum over here. This has been downtrending pretty aggressively here, but just pay attention. Watch this level over here. If it does come back down to 890, that's probably a zone to gain an entry. But these types of coins tend to only run, towards where the monetary policy is very, very easy and money printing starts to come back into the market. This is why you have to be so selective on the trades that you're taking. You can wait for a break and for momentum to shift. So you look for these strong moves up, and then you ride that momentum. Okay, Matic. Look, Matic has been absolutely crushed. I have to be totally honest with you. It's terrible. It's pretty much at new lows, right? As close as it could possibly get. It's downtrending. There's no bid over here. There's no momentum. This one has a lot of time before it will start to, let's just quickly fix that now. What have I done? Let's fix that. There we go. It's going to take a lot of time before it starts to break back above here and new momentum comes in. Similar to what I just said, probably only comes when they start to print a whole lot of money. Injective, that's probably an important one to look at. Let's have a look at Injective. Okay, it was previously a strong performing coin, but since then it hasn't done too well, right? Your worst case scenario is that it comes all the way down to $10, but that would mean that it has to basically halve in price. So I don't necessarily think that's likely that it's going to come down 46%. But for now, this is your level to reclaim. So again, it can reclaim this, and you probably won't lose money if you bought it around about over here. But the question is, are you going to get strong momentum where it's going to rally aggressively towards the upside? If you are buying it in those levels, your next trading level comes up to $30, which is going to be the mid-range of this chart. And then your range high is coming in all the way over here at 43. Okay, what else do we have over there? Okay, let's look at Aptos. Aptos also, I know fundamentally a lot of people are pretty bullish on Aptos, but the question is, what does the chart say? And remember the last time we looked at Aptos versus strong coins like Solana, and pretty much it had been getting crushed, right? So Aptos, let's just see. Aptos, USDT, here it is. Where did it go? Oh, there it is, there it is, there it is. Here we go, we got Aptos. Okay, it's played out a little LARP lines though. It's come back into the range low. Range low has been over here at $5.24. It is putting in a bit of a bounce. You are going to find a little bit of resistance at 740, and then after that, I would start to target 950. If it can get back above 950, that's maybe where the trend starts to change. But then you'll see that across the board of other altcoins as well. So keep an eye out on that. And then again, remember, if you do want to take any of these trades, right, most of these coins are also listed over here on Prime XBT. If you do want to use that exchange to trade the Forex pairs as well, it is there. Join Whale School, guys. And then also all the alpha is in Whale Room, right? All the alpha is in Whale Room over here. If you're looking for those calls and trades, smash the like button. I'm going to cut off over there. We'll wait for the CPI data, and I'll see you on the next one. I hope you all have a great day, and cheers for now.